Hey everybody, this is Paul Robinson from fxsimplified.com. This is going to be the video on the trade of the week for last week. If you want to go ahead and hit pause and read the risk disclosure, go ahead and do so now. Alright, now that we got that out of the way, let's move on to the trade. The trade that I'm going to look at this week, go over, is Sterling Aussie, or GBPAUD. It was a setup that I had pointed out on the weekly note last Sunday. Actually took a trade in Sterling Aussie and Euro Aussie. These pairs are obviously very highly correlated. Nevertheless, I'm going to go over Sterling Aussie and show you the execution that I had how I executed it. First looking at the daily chart, we have a head and shoulders pattern over here, with this being the left shoulder, this being the head, right shoulder, and then we've got a neckline. This triggered back in March, broke down, and a lot of times what happens is you will get a retest of the neckline, which is exactly what we got over here. We rallied through much of April into, this is actually the first, this was the first second trading day here, actually. Second trading day of the month. We tested this trend line, reversed lower. This test here where you have these two lines intersect, give you a nice spot to be able to use as a backstop. Now what I like to do is I like to find setups like this that are on a daily chart, and then drill down to the smaller time frames, where I can look to execute and perhaps find levels within those charts that allow me to execute using stops that are a little closer than maybe you would on a daily. Sometimes on a daily chart like this, especially a volatile pair like this, your stop loss could be 100, 125 pips or more even. Whereas if you start to get down into the 240, the 60-minute chart, you can really start to see where you could potentially then put on a trade and know that you're wrong in essence, and that you should probably take a stop or take a loss at say 40 or 50 pips or 60, and this will allow you to even maybe put on a larger position initially, or you just take a smaller loss in general. So, okay, so you have the general setup here. We have the retest over here of the neckline, and then you have the downtrend line intersecting the neckline. Now this is the 240-minute or 4-hour chart. What we have here is we had the big setup, and then within there we had a smaller one. So now we have a rising channel here, which if you're looking to take a bearish setup, you would you'd want to wait for it to break out of this channel or break this underside trend line here. And so that's what we got over here. We broke down. This was the first time it really started to break under was on the 5th of May, Cinco de Mayo. Then we broke down, and then the first degree of trend here has been compromised with this break. Now we have another more of a horizontal trend, if you will, kind of creating a head and shoulders. If you want to look at this here, you've got a left shoulder, you have a head up here, and after it broke and then it tested what this would then I guess be your neckline. You got a right shoulder over here. What I did is I waited for us to break this, and then once we started to get a counter trend rally, I sold into this right shoulder, if you will. And I ended up getting my first trade off at 180, 184. This was a 50% position. I'd also put on a Euro Aussie trade in conjunction with it. So in effect, you kind of had one full lot position here, because you were putting 50% on here, then you're putting 50% on the Euro Aussie, and with the correlations being as high as they are, in effect you had a trade on that was a normal size trade in position size and leverage. And the reason I like to, I do that often is I won't just put on one pair. I'll put it on, in 2 or 3 pairs, and I'll just kind of split the position up. Is because I don't know which, I don't know if Sterling or the Euro, which one's going to be, in this case is going to underperform the Aussie more. So I would rather have it spread out a little bit. So, in case euro were to take off and sterling were to tank, well, in that case, if you pick the wrong one, you may be sitting around, with kind of the right idea. Aussie against the dollar had rallied, which again, then if the Aussie rallies against the dollar, it's going to force these pairs lower. But if the euro had rallied hard and I'm sitting here with a euro short against the Aussie as opposed to say this one here, the cable versus the Aussie, then what happens is then you end up losing money, but you were right on the idea. So I like to spread it out. It's about as diversified as you can get in FX. This isn't stocks where you can put on a whole basket and within a sector, or an ETF and get exposure. So this is something I do often. But for demonstrative purposes, we'll just go over this particular pair. So again, we got this bounce off this neckline here. Got in at 181.84. Then once it broke, this support level here, then I put on another trade. And it wasn't very long after. It was only a few 4-hour bars later. It's the next day. Actually, it was this when we got in, it was on the 7th, then on the 8th, added into this. So we were able to. I got another lot off at 180.99, and then at this point, I was looking for us to get down around in here before I want to take something off the table. And I was able to get out around. So I had an average price of 181.42, and took off the first lot at around 18. Let's see, what was it? 180.07. So covered half at 180.07 for a nice 135 pips, and right now I still have a remaining 50% size position. I do fully expect that we will see much lower prices at some point. We'll get down here. It looks like probably at least to this 174 area, and if you go off a measured move off of this large head and shoulders, we should even see as low as 171. So with that said, I will be looking to find other setups, whether they be on the 60-minute chart or the 4-hour or even the daily. Maybe some consolidations. I could see something over here where maybe it gets a little oversold, and then it can't really rally and maybe move sideways for a few days, and in that case then we may have another setup to add to this existing 50% back to a full position. And if it moves back then lower down into here and gets towards the support area down in here around 177.50, then maybe we'd look to peel that off and move our stops lower on the 50% that we had initiated up here originally. So that's how I'm handling the trade right now. I hope that you found this informative. If you want to follow me and see how I am executing my trades in real time, you can follow me at my Twitter handle. That's at PaulRobinson78. Or you can visit me over at fxsimplified.com. I'm not as live and updating my positions and whatnot there, so Twitter is the best way to do that. I hope everybody has a great week trading, and I'll see you guys next week. Bye.